So just a little background and just to kind of give you a look at what we're going to talk about. This idea of pip movement ranges. I just want to give you a visual and then we can get into all the why and how and all that good stuff. So the first thing I want to show you is what the tool actually is. And here it is. This idea that there are essentially there are three ways that you can look at data in terms of just the numbers. And I'll get into the background in just a second, but just to give you a quick look, we're going to be talking about price range forecasts, movement per hour, and movement per day. And I'll explain how I use these and how you can use them too. And improve your risk management, improve your entry timing, okay, and also better have a more realistic gauge of where prices could go after you've entered the market and how long it might take for prices to, say, reach a stop loss, reach a initial profit target, or just move outside the no man's land zone, which is what I call that area between, once we've entered, that area between our initial risk-based stop loss and our initial profit target. So, first of all, why do you care? Why should you care? Why pip movement ranges? Why is this so important? Why this is important to you is basically this. We live in a 24-hour market when we are Forex traders. And that's a challenge that is not common to other types of traders, whether they be futures, equities, options. It's not really the same type of 24-hour engaged market. So we have a slightly different set of challenges and opportunities. Obviously there's an immense amount of opportunity when you really have a liquid 24-hour market. But some of the opportunity comes with this challenge of timing. We can't be in front of the computer 24 hours a day, and quite frankly, nor do we want to be. So now it turns into, how do you take your world, your schedule, and make it more realistic, not only to the life you're living away from the markets, but when you are in front of the markets, making sure you're in front of markets that could actually do something that you can act on. What a concept, right? That's very important, and that's a challenge that a lot of Forex traders have because, quite frankly, when we're looking at this rhythm, the pip movement range rhythm, one of the challenges that all Forex traders are going to have is, am I sitting in front of the computer at a time when I can actually trigger some sort of buy or sell? Now, a lot of that's going to depend upon your time frame, and some of that's going to be outside the scope of our limited time here, but I want to explain what it is that we're looking at and what kind of opportunity that we can seize on if we can understand the rhythm of the market. That's what I'm going to call this. Pip movement ranges, really what I'm talking about here is the rhythm of the market. And the rhythm of the market really boils down to time. And time really boils down to my very simple question of who's awake. So the tool that I'm using is called Power Stats. That's the name of the tool, and it's made by a company called AutoChartist. And some of you might have access to this for free. I like to share tools with you all that I think you could access for little to no money, and this is one of the no money ones. You talk to your broker. If your broker is an AutoChartist partner, and there is an immense list of brokers that are AutoChartist partners, this is often a tool that you can get as a client for free from your broker. Okay? Now, in terms of where I was with this tool years and years ago, I met the AutoChartist guys up in New York when I was presenting at one of the Traders Expos many years ago. I think I've known these guys for probably, 6 going on 7 years. And one of the things that they're known for primarily are their chart patterns. That's one of the tools that pretty much everybody knows them for. And they really had so much more going on in terms of what they wanted to do. Because imagine they had all this data coming into their servers that were crunching away at these chart patterns. Like, for example, here's one on the Euro US dollar where a rising wedge had formed. And it broke the support of the rising wedge, and then it projected the downside support, which is known as a forecast area. And so, imagine all the data that's being chunked and calculated to identify this uptrend line resistance and this uptrend line support, and put that together and call it a rising wedge. And so they had all these calculations going. They had all this price data, open, high, low, close, going into their servers. And they realized that they could take this information and break it down in different ways. And that's when I came into it. They asked, what do you think if we gave traders, because we've got the data, what if we gave them projections based upon past price movement and current volatility, and gave them an idea of where they could expect a particular pair at a particular time. This is actually updated 4 times an hour, so every 15 minutes, and give them an idea of where prices could reach. It's just a projection of potential support and resistance. It's a projection of potential price movement. Hence, they call it the expected price range. Okay, so once we have this data, they said, well, what would a trader do with it? I said, oh my gosh, the possibilities really are very impactful and limitless depending upon the underlying analysis that a trader's doing on their charts. So that's where I stepped in. I said, I'll create some videos and I'll start writing up some articles about how I'm going to use it. And so that's what I'm sharing with you here. Now, there's a couple things that I think a lot of people have in terms of misunderstandings about this kind of information. This is not saying that prices will reach both, for example, the 3100 level and the 3066 level. All it's saying is that prices over the course of the next 15 minutes, as projected between 8:45 and 9 a.m., okay, Eastern Standard Time. So this is pulling basically now. What it's basically, all it's saying is that this could be the range within which the Euro US dollar will operate over the course of the next 15 minutes. Okay? Over the course of the next 30 minutes, the projection is that it will stay within 3100, well actually 3103 and 3062. So as you go further out, 1 hour, 4 hours, you can see the range, number one, widens. And the first thing I was so excited about, and this has everything to do with risk management and the time frame that you use to trade off of. At some point, the entry that you have has to be based upon the support and resistance and price action that you see on a specific time frame. And if you notice, these are some of the most popular time frames on the MT4 platform, which is what we're looking at when we're looking at our live charts. So what's really cool about this is that, and this is where I was so excited initially, one of the things that I'd always anecdotally known but really couldn't prove and explain to people in a way that I thought was really visually impactful is the fact that if you trade on a longer term time frame, you are looking at potentially more risk. Because here's how I calculate risk. Risk to me is really directly correlated to exposure. And by the way, so is reward. Okay? Risk and reward are really correlated to exposure. In other words, are you in the market? You must be in the market to be at risk, and you must be in the market to gain the rewards. But they are directly correlated. So, if I'm in a 5-minute time frame, a 5-minute time frame by its price movement and the way the support and resistance will be drawn from the touch points of that price movement, I'm not likely to be in a 5-minute time frame, or even say, for example, a 15-minute chart. I'm not likely to be in that time frame for very long. So if I were to just say jump over to the euro US dollar, which is just selling off like crazy right now this morning. A 15-minute time frame is not necessarily one that I will be in for as long as, by comparison, a 240 or a daily. Okay, each 15-minute chart or each 15-minute candle is going to create 4 new candles every hour. So with 4 new candles every single hour, how many candles do I have per day? I have 96 new candles. So 96 candles. Could I potentially have more patterns, more touch points, more trend lines, more horizontal and support levels than the 1 candle that I'm going to get every day on a daily, or the 6 candles I'm going to get every day on a 240-minute chart? I don't think that's too much of a stretch of common sense to say more potential opportunities will arise with the fact that I've got 96 candles. So the fact that I could get in and out of the market at greater speed, with, well, I should say more frequency on a 15, I don't think is unrealistic. The fact that I will bump into past touch points that create support or resistance or nearer term highs and lows, where we can see the market actually reach a low and turn around, or reach a high and turn around, the likelihood of my running into those with more frequency are greater as well. So that makes the room to run for, say, a 50-minute chart, I think, a little bit more stifled than that of, say, a daily again. Okay? So when I was looking at this information on the power stats, what became abundantly clear, let me go grab an image of that again. What became abundantly clear is the fact that given more time, my daily pip range, my expected pip range is wider. Look at the difference between where we could move over the next 15 minutes over the course of the next 24 hours. Okay? So if I'm looking at the euro US dollar and I'm trying to determine, now let's use these expected pip ranges and apply them in a more realistic way. Let's think about potential setups here. So in terms of, imagine your chart right now, and let's use some live examples right now. What I want to do is I'm going to start with my typical trading, opportunity trading setup scan, which means that I head over to the live chart and I'll head over to the daily time frame specifically, and I'll assess what the directional bias is of the pair. While I do have an immense amount of bullish sentiment and momentum, I would not call this an uptrend on the daily time frame. In fact, I've been talking for quite a few sessions about my expectation for exhaustion at some point, because I feel that both the US dollar index futures contract and the euro US dollar are going to transition into a more distribution-like market trend. I've been talking about that for a while. This is probably the first significant candle that's coming to make that hypothesis more of a reality. In other words, I think we might have found our top, and if it is, I think we probably found our distribution range. But the bottom line is I don't have a trend on this daily chart, which means that in a lot of ways, while I need to respect the support and resistance of the overall range that we're likely to chop within, I'm kind of free to trade either side of the market, because I don't have a dominant bullish or bearish psychology that is going to limit me in terms of only taking counter trend trades on short-term time frames. I can pretty much trade any time frame in any direction because we're moving sideways. However, because we are in a distribution market trend, and I expect there to be volatility as bulls and bears try to feel out where they want to find, where they're going to set their selling resistance or where they're going to set their buying support, one of the things I'll probably do is still focus on short-term time frames, because in a distribution market trend, in this sideways volatile chop, there's a higher likelihood for a lack of follow-through and more confusion, and confused markets simply do not follow through on longer-term time frames the way I typically would like. So with all that being said, I'll probably still going to focus in on the 5, 15, and 30-minute time frames in this overall market environment. So what does that present to me? I think it presents to me a number of potential swing entries. Now, one thing you might have noticed on the 240-minute time frame, and I don't want to ignore it, is the fact that we have sunk into the swing buy zone. So I am going to recognize the fact that the 240-minute time frame is in an uptrend. And because of that, this pullback into the area between the 20-period simple and the 34 exponential high is a zone that buyers will likely support. And we can see they kind of are. We can see prices have just about gotten back above the 34 EMA high. So, is this a buying opportunity? It very well could be, but here's my challenge. For this to follow through back up higher, I technically would absolutely need what? Support above the daily 20-period simple and a push up towards the very highs at which the sellers had rejected prices advancing before. So, do I want to put myself in a position where I need to get long, and for the most part, I need buyers to push up towards where they were rejected before? It's a valid buy, and it's not absolutely out of the question to say that we could push back up towards, say, a previous near-term high that you can see here at, say, 3181. Just in front of the 32 major psych level, actually perched right at a minor psych level, the 80. So is it out of the question to say we could reach that high, or even this high back here, which was 3165? You know, could I do that? I could. What I don't like is the fact that I have to have enough buying momentum to get back over 3100, where there could be a lot of selling pressure. Okay? So I'm not wild about this setup because, one, I've got to push back up to levels at which we exhausted before, and I have to have enough bulls that are willing to take another run at that after a fairly recent and dramatic sell-off. How many bulls are willing to do that? Run at this brick wall again? I have my doubts. But I absolutely could put the 3180 and the 3165 level in mind for a situation exactly like that, where bulls might want to run at this again. But, you know, we're selling off pretty dramatically. And if I do want to stay nimble, that means short-term time frames. I do need a bounce here, by the way. I would love a bounce. In fact, this 15-minute time frame is bouncing in a way that I would love to take advantage of the bearish sentiment and momentum we are seeing today. In other words, it looks like we're in a risk-averse environment. By the way, how could I confirm the risk-averse environment? I could jump over and take a look at the YM contract, the Dow Future Mini. And what do I want to see here, by the way? I want to see that the Dow is showing me a fairly weak look right now. That's really what I want to see. I want to see that the Dow is not strong. That's a key. What else do I want to see? If the Dow is not strong, what else would I like to see? I'd like to see that the dollar index is moving up higher. Red Dow, green dollar. That's what I'd like to see, because that would lead to the kind of organization of opinion, of sentiment and momentum in terms of risk. In this case, risk aversion, that could help me see some follow through to the downside, which is what I'd want if I'm playing a 15-minute Euro US dollar swing short. Where does Power Stats come in with all this? Well, now that I've set my larger scene, because let's not forget, Power Stats actually comes in terms of timing. And here's a tip. In terms of your timing, Power Stats comes towards, say, down the down stretch, if you will, kind of the last part of your analysis, where you've found an opportunity that you would like to take advantage of, and now you're looking at the timing of where you could find exhaustion and what the length of time is for prices to get to that exhaustion level. So I have 3100 overhead, and I think that we could make another run at that 3100 major psych level, and then I would like to see selling pressure kick in somewhere between 3095 and 3105. According to my 15-minute time frame, we could actually exhaust somewhere between the 20 period simple, which is sitting at 3112, all the way up to about 3120, the minor psych level. Again, love the overlap with all these major and minor psych levels that often are those sort of invisible support and resistance levels that are powerful because of the way that we as human beings tend to place our orders, whole round numbers, right? So I would love to position myself up in this area as prices battle it out with 3100, but it looks like it might be just above the 3100 level. That's certainly possible. I think my initial aggressive level could be around 3095, which is that selling pressure that would be just in front of the big double zero. There's the big double zero right there. So what's the likelihood I'll even get there, and what's the likelihood for exhaustion, and how long might that take? Re-enter power stats. So I want to take a look again at that euro US dollar. I'm going to take a look at the analysis for this particular pair. I want to make sure I'm looking at the updated analysis, because every 15 minutes this will adjust a little bit. And if you remember, at the beginning of our talk, we were sitting at about 3100 to 3103 for the 15 and 30 minute time frames respectively. We've shifted up just a little bit to 3103 to 3111. This actually works out great for what I'm looking at, because what this is telling me is that between now and about 10 a.m., I am looking at resistance coming in at about 3103 to 3120. That's pretty much where my 15-minute swing buy was showing me that I'm going to be looking to enter short. So that's where all this comes together. Now, I don't want to get too far ahead, because I do want to mention before we wrap up here, this is how I would set up a trade. But this is very specific data to the moment of setting up a trade. There are some more broader strokes. So the price range forecast, which is what we've been looking at for most of this discussion, is for that moment in time where you know that you've got a setup and you're trying to identify where prices could exhaust and when they could exhaust. Again, these projections. But there's a rhythm to the day, and that's really what Power Stats is about to me. Because looking at the trading rhythm of the day, I also have to acknowledge that these hours that this trade could be taking place within takes place within the window of the most volatile trading hours of the day for the euro US dollar, which is between 8 a.m. and about 10. So these three candles, 8 to 9, 9 to 10, 10 to 11, are the most volatile in terms of how many pips we could move per hour. This is a more general look based upon past price movement. The band across each bar is the average. Okay? So how do I know where I'm going to fall within this overall bar? I don't want to always just go with the average. I want to look at my economic calendar and see what I could be dealing with in terms of economic data and events that could increase the likelihood for operating below the average or above it. Now, we do have the EU summit. We had ECOFIN last week. We have the EU summit this week. They're just hanging out in Brussels. Hanging out in Brussels and trying to figure out what the heck's going on with the euro and how the heck they can keep it from circling the drain much, much longer. We'll see. Bottom line is, could headlines and sound bites and little pieces of information be released from that? Yes. I mean, this is going to be an all-day event. Day meaning Brussels. So really between now and about 1, maybe 2 p.m., we could see some information coming out of there. Okay, so think about what time it is in Brussels. We also want to acknowledge that once that's pretty much done, and we don't really have any other economic data coming out of Europe, chances are we'll probably operate around the average. Okay, unless something dramatic comes out of the EU summit, which means, say, per hour about 50 to 70 pips. Okay, this gives me the rhythm of the day. Again, these are broader strokes. What do I know about after 11 a.m. Eastern Standard Time? And by the way, this o'clock is an Eastern Standard Time, New York time. What do I know about 11 o'clock? After that, we're going to go into lunch here on the East Coast, and the doldrums begin. I also want to keep in mind that after about 11 o'clock, 12 o'clock, we start losing the bulk of the participation out of Paris, out of Frankfurt. After noon Eastern Standard Time, we're going to lose the bulk of the participation out of London. So Europe and the UK are going to basically wind down after this time, and look at look how quiet the price movement, the volatility becomes. So our expectation for price movement after 10, after 11, after 12 Eastern Standard Time drops down tremendously. Not only does the average drop, but the high to low range per hour will likely drop. So again, is my expectation for price movement different between 8 and 10 a.m. than, say, noon and 2? Absolutely. In fact, is my expectation for price movement different between 8 and 10 a.m. than, say, 8 and 10 p.m.? Is the UK, or I should say Europe, UK, US overlap very different than the Asian? Oh gosh, it's night and day, isn't it? Look at the difference. It's a completely different rhythm. Completely. So I need you to keep that in mind when you are looking at your setups and what time of day it is that you're setting these trades up in terms of risk and reward and expectation for price movement.